Alright, so welcome back to another video on how to secure yourself financially. So right now, I'm just going to jump straight forward on the beginner guide to financial statement as opposed as I did in other videos, right? When I made a quick recap of Morningstar, the Morningstar investing classroom, their course like feature content, stocks, bond, portfolio, ETF, uh, funds, and ESG, right? Environment, government, and social. So instead of making that quick recap or a course review of all the topic that I have learned so far, I'm just going to jump straight forward here to the beginner guide to financial statement uh, because I just want to make sense and to understand deeply uh, how to read basic part of the financial statements, and especially not only to be able to look at a company financial statement, but also to apply that to myself. If I see myself as a company that, or as a business, that is something that I would like to do. So apply your knowledge in your specific field. So knowledge apply. Right. So here in this section, so they mentioned that if you're able to read nutrition labels or baseball box scores, you can learn to read basic part of financial statement. If you can follow a recipe or apply for a loan, you can learn basic accounting. And the basic, they're not difficult. Is yeah, I'll agree on that. Perhaps at the beginning it might be quite difficult, but after you dedicate time to that and the compound interest in time, once you dedicate to this topic, now things are starting to make more clear about it. So this section is just designed to learn how to read basic financial statement and to gain some basic understanding of financial statements, much like a CPR class teach you how to perform cardiopulmonary resuscitation. But this section will explain how to read the basic part of a financial statement. It will not train you to be an accountant, uh, just like a CPR course will not make you a cardiac doctor, but it can give you confidence when you're able to see a set of financial statement and to make sense of that. So financial statement, after all, they show you the money from the immortal, from the Cuba Gooding Jr. immortal lines from Jerry Maguire. Show me the money. That's exactly what financial statement do. They show where the company money came from, where is it now, and where it went. There are four financial statements: balance sheets, income statements, cash flow, and shareholders. Sorry, statement or the shareholders. So balance sheets show what a company owns and what it owes at a fixed point in time. Income statements show how much money a company spent and made in a period of time. Cash flow shows the exchange of money between the company and the outside world, and the shareholder or the statement of the shareholders show the change in interest of the shareholders over time. So right now we're gonna look at the first three financial statement: balance sheet, that it show uh, the company assets, liabilities, and shareholders. So assets are anything that the company owns that has value. Typically, they can be sold or can be used to make products and servers um, to, to be sold. So, for example, here on assets, Inventory. So that's one way of you sell your assets, all right? The other is when it comes to manufacturing here, meaning is the process of transform your assets into products or service. Okay, so in my case, as a freelance consultant, particularly as a software knowledge as business consultant, well, I'm offering is my business or my service as an asset to someone else to provide value to others. But again, the asset can be divided in tangible, inventory, land, tractors, furniture, uh, a non-tangible. So you have trademark and yeah, so you have trademarks and patent. Okay, liability, cash is another form of asset. Uh, in the investment that a company made is also an asset. So in liabilities, this is the money owned that a company owns to others, and uh, they typically fall in company or money that a company owns to its suppliers, or borrow money from a bank to produce a product or service, the rent of use a building, the payroll a company owns with its employer, environmental cleanup costs, something that happened recently from the Ohio Railroad, if I recall that great, from the Ohio now. As crew removed contaminant soil and liquid from Ohio toxic train. You know, exactly. So from Ohio, alright? And mhm. As crew removed contaminated soil and liquid from Ohio, like that. Uh, Again, environmental cleanup costs, tax owed to the government, and any obligation that a company expects to pay by a product or service provided in the future. And then we have the shareholders' equity, also known as the capital network. So, is the total amount of money left to the shareholders or the owner of the company if the company assets were liquidated and all of its pay off all of its liabilities. So that is generally organized using the formula assets are equals to liabilities plus shareholders, right? So sometimes you may have all the company asset list on the left side and on the right side the liabilities and the shareholders, or on top you have all the company assets followed by liabilities and shareholders equity. Great, because now generally when you look at this balance sheet, uh, the assets are generally listed based on how quickly you can convert them into cash. So you have current assets and non-current assets. The first is assets or things that a company expect to exchange or to convert into cash within a year. Inventory, for example, non-cash are things that a company are not expect to sell and are not expect to be sold, or it will take longer than a year to be sold. So in there you have fixed assets like things that allow to operate your business. And then we have liabilities. They are listed generally based on their due date, uh, they're generally listed based on their due date, and you have short-term obligations that a company expect to pay off within a year, and long-term due in more than 1 year. And then the shareholders' equity, which shows the total amount owners invest in the company assets plus or minus the company earnings and losses and or losses. Uh, the shareholders' equity is a total amount owners invest in the company stocks plus or minus company uh, revenue or losses, right? Since inception. So sometimes this company they redistribute their earnings and they call that dividend instead of retain them. So the general thing here, or the TLDR in a nutshell, so that is the so a balance sheet is a snapshot of a company assets, liabilities, and shareholders equity at the end of a reporting period. So it doesn't show the flow of money in and out of it. No. So that's when we look at the income statement that show how much revenue the company made, uh, and the associated costs and expense with earning that revenue in a period of time, quarterly, annually, you name it. So the bottom line is that show the company net earnings or losses. So it shows if a company is making money or not, right? It also shows the EPS, this earning per share calculation that show how much shareholders will earn if all the company assets were, I mean, if all the company uh, earnings were distributed uh, in a period of time. Company almost never do that. In fact, they reinvest that in their own business. So to understand this income statement, think of them as a set of stairs, right? At the top, you have all the sales uh, that are made. So you have so at the top you have all the sales made by. Uh, at the top you have sales made sales from products or service made in a accounting period, right? Quarterly, annually, and as you go down each step, you make a deduction for certain costs of operating uh, your business associated with earning that revenue. So, uh, associated with earning that revenue. Uh, so, at the bottom of the stairs, after deducting all of the expense, you learn how much a company actually made or lost in that accounting period. And people often call the bottom line. Okay. So the bottom line, when you hear that sentence, meaning that is the bottom line, right? When you hear that the bottom line, it means that what is the core of it? So what is the essence? Or tell me if you're doing or not. Tell me if you're doing or not well, right? Tell me if you're making or not money. So the bottom line, and most U.S. citizens and European will use that a lot, right? A lot. Okay. So great. Cool. Cool. Yep. Cool. Uh, yeah. Basically that's it. Yeah. Cool. Okay. This is a top level view of what is this income saving. Just a moment. Okay. And we're ready. Almost there. Holy shit. Okay. There you go. All right. Cool. Done. Um. So yeah. So this is from a top level, get a bigger picture of how income statements are set up. Okay, so you can think of them as a set of stairs. You start at the top with the total amount of sales brought in by with the total amount of money brought in by sales for the product and service, and you go one step at a time, and each step you go down, make a deduction of certain expense of operating your business associated with earning that revenue. And the bottom line, or at the bottom of the stair, the bottom line show you if a company is actually making money or not, right? So they call that the bottom line. So now let's going to look each step of those uh, stairs, right? Or the most common uh, step on those stairs. So at the top of the income statement is the total amount of money made from sales of products and service, and they call that gross revenue because expense has not been deducted from it yet. So the number is gross or unrefined. So the next line is things that a company doesn't expect to collect, like sales discounts or merchandise return. Then, once you subtract uh, the returns and allowance or anything that someone else pay you a fee money. So, for example, the amount of money that your parent give to you monthly, all right? In Spanish, is called una remesa or subsidios, all right? So after deducting returns and allowance, or, or, or once you subtract, uh, uh, yeah, once you subtract from the gross revenue the returns and allowance, all right? Now you arrive at the company net earning. And they call that because you can think as in a net, so uh, the revenue or this revenue, are left in the net after the deductions from allowance and returns have come out. Moving down the stairs, from the net revenue line, okay, in Spanish is called uh, ganancias netas, okay, after you're making a couple of deductions from the allowance and return, and also sales that you won't expect to collect, or money that you don't expect to collect from allowance or return, right? So moving down the stair from the net revenue line, so there are several lines that represent various kind of operation. There are several lines that represent various kind of operating expenses. Although this line can be reported in various order, the next line after the net revenue typically shows the cost of sale. So once you move down the stair from net revenue, uh, there are several lines that it represents various type of operating expense, and all this line can be ordered or can be reported in different order, but most of the time, or typically, the next line after the net revenue is the cost of the sale. So these numbers tell you the amount of money a company is spent to produce the good or service it sold. For example, so when you look at Coca-Cola here in their income statement, all right. So looking at Coca-Cola and their income statement, uh, so we look at the total revenue, the total amount of money made from sales of product and service. If you go down the line, you have is things that a company doesn't expect to collect, or money that a company doesn't expect to collect, like sales discounts or merchandise returns. When once you subtract the revenue and the allowance, okay, an allowance here, an allowance, accounting allowance, okay. Let me let ChatGPT tell me that or concept. Oh, are you there? So in any case, so after no, I don't think you're gonna upload it. ChatGPT, GPT, verify you're human. You gonna hear me? Not at all. So many users chatting. No wonder they're lagging. But they will fix it soon. No need to fret. Wow. ChatGPT is at capacity right now. Get notified when we're back. Holy moly. Get notified when ChatGPT is back. Okay. So, allowance. So again, allowance is that. So from finance, in the finance aspect here, in finance, the amount of money something available or need for a particular purpose. An allowance is also money given by parents, and that money that someone is given regularly by their employees, by the employer, or by the government to pay a particular thing. So in this case, the allowance is a regular discount, okay, or merchandise return. That's not regular, but you have to count with that. You need to account that. You need to take note of that. Yeah, an amount of something that someone is allowed to have, use, produce, etc. Baggage, luggage allowance. Baggage allowance is two free bags per passenger and 80 per additional bag. Yep. But again, is money that someone is given regularly to the employers by the employers or by the government. And here is, well, money or discount uh, that the company is giving to their customer. Okay, that's allowance. Okay, so what is the allowance? An accommodation, car milestone allowance, accommodation allowance. Okay, an allowance for to or to do. So companies will give their telecommuting executive an allowance to buy office furniture for home. Mhm. So in the context of in Spanish it's called una remesa o un descuento, también podría ser un subsidio. Okay, but again, it's a money that someone uh, receives regularly for someone else, right? In the case of discount sale, right, or return. Uh, all right. Okay. Uh, so um, with this, all right, with the total revenue. So yeah, after you subtract the returns and allowance, now you arrive at the net revenue, and they call net because if you can think of net, the revenue are left in after deduction from uh, allowance and return. So moving down the stair, you have most of the time the cost of sales or the cost of revenue, right? The cost of sales. Moving down the stair from the net revenue, uh, typically it shows the cost of sale. And this number tells you the amount of money a company spend to produce the good and service. Is that this number tells you the amount of money the company spends to produce the good or service it sold during the accounting period. So this amount here representing is the total or the total amount of money that a company spends to produce the good and service in that accounting period, right? Quarterly or annually. So annually they spend 18 millions. Actually, this is billion. Coca-Cola spent $18 billion. Jesus. To produce a good and service. Okay, quarterly. Yes, they show this quarterly. Annually, annually is this. And quarterly, they expense $4 billion. $4.5 billion. And another day in the business. For them, it's like another day. And it is funny because they outperform themselves from the last period, right? So they improve themselves. Not that much, not in this two quarter, right? Not in this two quarter. Okay, those quarter were painfully, uh, not to mention the quarter from 2021 to 2022, and now they're starting to get out of the recession. It seems that, it seems that. Uh, okay, so that's typically after the net uh, revenue. Uh, you have is the total cost of sales. Okay, so the next line, okay, the next line, subtract the cost of sales from net revenue to arrive at the subtotal called gross profit. So gross profit is subtract, uh, yeah, so cost money, so gross profit subtract the cost of sales means, okay, rompe. So, so the next line subtract the cost of sales from the net revenue to arrive at a subtotal called gross profit. So once you subtract the cost of sales from net revenue, you arrive at the gross profit. Okay, that makes sense. Okay, or in Spanish is ganancia bruta. Okay, and sometimes or sometimes gross margin. So gross profit, gross margin. So most of the time, when you talk about gross margin or gross profit, is uh, because it has been deducted the cost of produce that good or service from the total uh, net revenue. For the total, yeah, for the total net revenue, and the net revenue, it deduct from gross revenue the allowance and return. Okay, so when you subtract the return or the gross revenue, okay, exactly. So when you subtract is the gross revenue, uh, exactly. So when you subtract the return and allowance from gross revenue, you arrive at the net net revenue. Okay, and they call net because you can think of net. Uh, the revenue are left in after deduction from the returns and allowance. Okay, okay. So gross profit. Uh, you start with in an income statement. You start with the gross profit. What and also uh, the next line is money that a company doesn't expect to collect from sales like discount or merchandise returns. And when you subtract is the return and allowance from the gross revenue, you arrive at you arrive at net revenue. Okay, and moving down, most of the time, or you will find after the net revenue, the cost of sales, how much a company spends to produce that good and service in that accounting period. Okay. In the next section, uh, once you subtract the cost of sales from net revenue, and you arrive at the gross profit. And it is called gross because there are certain expense that has not been deducted from it yet. Next, okay, next when you have this gross profit, okay, which is hey, here we are, we're back. Accounting allowance. Accounting allowance. Is this a gross profit? So this is the total amount of money once you subtract the cost of revenue from the net revenue. And then you have as the gross profit. And it is called gross because there are certain um, expenses that are not being deducted from it yet. Okay. And looking here at quarterly, this. Alright, and here we are. Gross profit or sometimes gross margin is considered gross revenue because there are certain expense. That's right. And the next section deal with operating expense, company expense operations for a given period. Okay, so the next section deals with operating expense. It makes sense because one is to now deduct things uh, uh, or expense to support the company operations. Okay, so after you reach at the gross profit, so the next section deals with operating expense, or it's about of operating expense. So expense that goes towards supporting a company operations, or a expense that go for supporting. Okay, expense that go towards supporting company operations for a given period, such as salary of administrative personnel and cost of researching new products, marketing expense that are another example, and operating expense are different from cost of sales, which were deducted above, because operating expense cannot be linked directly to the productions of uh, product or service being sold. Okay, so you have now operating costs, so operating expense. Okay, you have operating expense and expense that go towards supporting the company's operations. Okay, for a given period. And for example, you have salaries administrative, cost of researching new products, marketing expenses. I would like to identify this. So salaries of administrative personnel. Okay, so salaries, cost of researching new products, marketing, uh, and operating expense are different from cost of sales, which were deducted above, because it cannot be linked directly to the production of products and service being sold. Okay, but again, is they're important to support a company operation. They're important to yeah, they're important to support the company operation. Okay, so after the gross profit, the next section deals with operating expense. Uh, Expense that goes towards supporting the company operations, such as salaries, researching new products, such as salaries, researching new products, marketing. Uh, this is different from cost of sales or the cost of sales because it cannot be linked directly to the production of product and service in that period, right? They're necessary to support the company operations, but they cannot be tied to the cost of sales. Okay, okay. So far we have is the okay. Um, so far, mm, uh, so far in an income statement we have is on top the gross profit. Once you go down the stair, if you think at income statement as a set of stairs, you start at the top with the income, the gross revenue. The next line is the money that the company doesn't expect to collect from sales discount or marketing or merchandise return. Okay, after you deduct the return, this merchandise return and allowance from gross revenue, you arrive at the company net revenue. And it's called net because if you can think of a net, you all the revenue left in are after deducting returns and allowance. The next line is uh, sometimes you have different type of expense you make, but typically you find is the cost of sale. So this is how much money a company spends to produce the product and service in that accounting period. Okay. So when you deduct the cost of sales from net revenue, you arrive at the gross profit. This is called gross because there are certain expenses that has not been deducted from it yet. Uh, and the next section deals is with the operating expense. So um, expense that goes toward supporting the company operations for a given period. Okay, so for example, you have salaries, the cost of researching new products, marketing, and this cannot be linked to the cost of sales because they are not directly tied to the production of product and service. Uh, yeah, to the production of products or service. Then we have depreciation. It's also deducted from gross profit. Okay, so uh, gross profit. So from gross profit, you going to deduct is operating expense, and depreciation is also deducted from gross profit. And depreciation takes into account the wear and tear of some assets. Tear. Yeah, I know, but in this context here, not that kind of tear. Okay. To separate part of a pull apart by a force and transitive verb. To wound by or if by pulling apart by force, lacerate. To tear. Okay. Laceration. To wound by or if by pulling apart by force, to divide or disrupt by the pull of contrary force, to remove by a force, wrench, often used with off, tear off, okay, tear a cover off a box, to remove as is by wrenching, tear your thoughts away from the scene, to make a hole or opening, intransitive verb, to separate or being pulled, to remove or act with violence, haste or force. As a verb, is an action of violence when disclosed tears easily. Interesting. When tearing down the street. Okay. When tearing down the street. Okay. First, now I would like to see what is the Urban Dictionary for tear. Okay, tear. Urban Dictionary tear is how your body speaks when your mouth can. What? She put down the phones. She put down the phone and tears of pain as tears of pain start streaming on her face. Her love will never come home again. On a tear, on a strike or series of unusual winning straight. The English equivalent of the emoji, often used in conjunction with love, by passive aggressive, but exactly this is in plural. How your body, how your body on a tear, on a strike of series, usually a winning streak, will sometimes be used semi-sarcastically to define a losing streak. On a tear, huh? Losing streak. The market went up 40% in the last 4 weeks. The market is on a tear, and here the market is steering it up. Okay, it's fucked up. Tear it up. Interesting. Holy moly. So tear, okay, so tear, after all this, to pull apart, to separate apart, wound or to divide or disrupt. Okay. So depreciation takes into account the wear and tear of some assets. Tear down, tear it down, tear it off. This clothes tear off easily. The clothes tears easily. This cloth tears easily. Mm, mm, mm. They wear and tear on some assets, such as machinery, tools, or furniture, which are used over the long term. Companies spread the cost of these assets over the period they are used. This process of spreading this cost is called depreciation or amortization. The charge for using these assets during the period is a fraction of the original cost of the assets. But here they mention is the depreciation. Okay, it's also so depreciation is also deducted from gross profit. And depreciation takes into account the wear and tear of some assets, such as tools and furniture, which are used over the long term. Companies spread the cost of these assets over the period they are used. This process of spreading these costs is called depreciation or amortization. The charge for using these assets during the period is a fraction of the original cost of the asset. After all operating expenses are deducted from gross profit, you arrive at the operating profit before interest and income taxes and income tax expense. But again, depreciation is also the dollar from gross profit, and depreciation takes into account the wear and tear of some assets, such as machinery. But this word, this verb, the wear and tear, interesting. And what they mean here is a damaging, gradual removal or deformation. Wear. The study of wear and related processes is referred to tribology. What the hell? Wear. Mm, Wear. Wear types and mechanism. Adhesive wear. Abrasive wear. Surface fatigue. Surface fatigue. And then threading wear. Erosive wear. Corrosion and oxidation wear. Um, so wear in Spanish. Daniel, no, from Cambridge. What the hell is this? On body. On body? Okay, weird. Of course. Depending on the context. On body, weird. To arrange your hair in a particular way. When she's working, she wears her hair in a ponytail. She wears her hair in a ponytail. To become weaker, damaged, or thin because of continuous use. Desgaste in Spanish. To Okay, to have a piece of clothing, jewelry on your body. Yeah, okay. Weird, the amount of use. El desgaste. As a noun. Okay, as a noun. If you have a word, it's on your body. Okay, as a verb, it's on your body. As a noun, is the damage or the amount of use. Replace it hard after 2 years of normal wear. Oh my god. Alright, two verbs here. Right now I'm learning two verbs. Wear and tear. Oh, holy crap. Okay. Oh, I love it. I love it. I fucking love it. So, okay, depreciation takes into account the wear and tear. When they mention here as known, uh, the use, the amount of use, and uh, and here is the amount of use or damage. Tear, a damage from being torn, a damage from being twisted or torn. Okay, as a noun, a drop of clear saline fluid. Tears, tears. Tore,
tore, tear,
tear. Oh, tear. Okay. Depending on the pronunciation. Tear, 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 tear. No, it's tear. Tear down. Tear and wear. Wear. Wear.
where,
Wear.
where,
Wear. Oh shit. Tear.
tear,
Tear. There.
where,
Where?
where.
Where? Okay, so that'll be all for this video. Take care. Bye bye.